Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 8th of December. I'm Daniel Lam, your host for the podcast. We got some heavyweight central bank decisions in these couple of weeks. Of course, there's the Fed this Thursday Asian time, where we're expecting a 25 basis point rate cut. Well, the Bank of Japan is also announcing its decision on the 19th of December, where the market is now assigning a 90% probability of a hike this month, up from 40% towards the end of November. This reflects firmer underlying inflation and clearer policy signals. Services inflation stays above 2%, while comments from the key BOJ officials suggest that negative rates and yield curve controls have become increasingly inappropriate. This has fueled expectations of a rate hike. Meanwhile, the Japanese government bond, i.e. JGB yield, is pricing in rising fiscal risk. 10-year JGB yields are at multi-decade highs, while 30-year JGB yields continue to break fresh records. This comes after the Takaichi government finalized a $117 billion supplementary budget. In addition, the Fiscal System Council, which advises the Financial Ministry, appears to have watered down its call for the government to achieve a primary budget surplus. This adds to concerns about the medium-term fiscal slippage. But while there can be concerns about Japan's fiscal position, it still got a relatively manageable net debt to GDP ratio. A structural supply-demand mismatch may have partly contributed to the sell-off of long-end JGBs. For example, the Japanese life insurers have not been making significant purchases of the JGBs. So, the risk that investors would be looking at from rising Japanese rates is the contrast with the easing monetary policies outside of Japan and an elevated risk of another bout of JPY funded carry trade unwind. However, we believe this is now less likely to be a surprise to the markets, which could limit the size of any resulting volatility versus the previous episode in August 2024. So we may see the dollar-yen testing the next support at 153, followed by 150. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.